we got to talk about Teladoc, and I think we should hear straight from the person who believes in Teladoc. I don't know if everyone's seen this yet, but I think it's worth 3 minutes of giving
Cathie,
it a watch of Cathie. So here's 3 minutes of her defending T-Doc, and then we'll give our thoughts. Everyone can see it, right? Yes? Okay, cool. I'm going to do full screen.
Joining me now is Cathie Wood, the CEO and CIO of ARK's owner, ARK Invest. Cathie, welcome. We all give you credit for coming on to talk about why in the world you bought $20 million more of T-Doc yesterday, right?
Sure. Hi, Kelly. And yes, I'd much prefer to come out at this time than to come out and be all over media when things are when stocks are soaring, because I think this is our best value add. Yes, Teladoc, very, very tough quarter. And that's particularly for investors who are quarter-to-quarter oriented. As you know, we have a 5-year investment time horizon, but as fears about inflation and interest rates have moved up, time horizons in the market have shortened to basically a quarter. And so the analysts picked apart the quarter.
Hey, Amit, can you mute your mic?
On the direct-to-consumer business, which did have a shortfall. There's more competition in that space as venture capital is financing some companies who are getting into niche areas. Now, our point of view is that Teladoc is becoming the healthcare information backbone of the United States. It serves 16% of Americans are paid users. And whenever we look at S-curves, we are looking for that 15 to 20% range as a trend moves into that market share. That is the beginning of an S-curve. And the story is not direct to consumer for Teladoc. Certainly that was a big booster during COVID. The story here is much bigger. It's business to business. What was not mentioned, and no questions about Northwell, the New York or tri-state area hospital system that Teladoc has won, took it from another entity. And what was also not mentioned is Amazon's decision to partner with Teladoc as opposed to compete with it. The stock had been beaten up regularly over the last year as Amazon said, we're going national. And instead, Amazon has capitulated and at least is going to partner for some healthcare services and certainly through Alexa with Teladoc.
Sure.
So I think the story here is huge. When you think about healthcare as 20% of the U.S. economy, so a $4 trillion ecosystem, the waste there is at least $400 billion.
Sure.
We would say most of because this healthcare information system connecting patients, doctors, insurance companies, and hospitals has not been put in place. This is a winner-take-most market, and we feel that yes, short term there was an earnings shortfall. They had to cut estimates. Admit that. We're looking 5 years out. We're looking at one of the biggest stories in healthcare, a category killer during the next 5 to 10 years.
Sean, we'll start with you. What are your thoughts?
Come on. Like CNBC, is there only one person on the planet you can possibly interview? And they always make it out like it's some genius level preponderance of information on every time Cathie's on. Look, I don't know Cathie. I have no beef with the lady. I don't care what she does. But everything she says is like well-known facts that anyone who's even new can recognize. Is the future of healthcare changing? Yes. Is Teladoc likely to be a player? Yes. Did you still find a way to lose money on that even still? Yes. I'll give you a great example. I use telemedicine all the time. And let me tell you how easy it is. I go to CVS. It's covered by my insurance. I set up an appointment in 3 minutes. Right through CVS Minute Clinic, I can meet with a doctor online and get whatever I need. And what I've been doing is actually, I'll give you guys another. I do this all the time when I talk to guys. I make a big deal about due diligence. I won't go too deep on this right now. Like the level of due diligence I do on companies. I started scheduling and meeting on these services, and what I've been asking the doctors is what percentage of your patients can be handled online versus in person, and every one of them is like 90+%. Like very rarely do we really need someone in for a first visit to come in who's sick anyways and even take them out of their house. I don't think there's anyone who's disagreeing that the future is a virtual experience. It's not even a debate. I think what's laughable is his continued push of like it's 5 years. Teladoc's a great company in theory. They've got to get their stuff together, which clearly they didn't. It's embarrassing to think that they missed because it's a predictable business. That's what bothers me here. It's not the company. It's not the technology. It's that they couldn't even predict their own numbers for a predictable business. That's what bothers me. What bothers me more is the person who keeps pushing these can't seem to do it either. I'll leave it at that. Like, I just like CNBC drives so hard to get the same exact two people on every single day. And it's like there's no variance in opinion. We just make it seem like losing money on a regular basis is somehow a genius move to then buy it lower. And I want to be clear about one thing, and I'll literally go on mute. Her buying 20 million of T-Doc, doesn't she already own $1 billion worth?
Well, she owns, yeah.
That's
Now
like finding a $20 bill in the street and being like, well, I'm a millionaire. It's like, well, yeah, because you already had $1 million. You just found a $20 bill. You know, I mean, it's silly. What they didn't say in there was that she had $1 billion already. They said she bought 20 million. I mean, it's like, come on, it's silly. Everybody knows it's a great company.
But Sean, I don't feel that CNBC paints Cathie in a genius light. I feel when she comes on, they're like, Cathie, explain it to us because we don't get your position.
So I'll give you my explanation for it. If you're an investor who's relatively new and CNBC is the channel you watch, which most retail investors watch CNBC, and you see the same person every day, who also, by the way, is marketing her own fund to get paid on the AUM you give her. That to me is the problem, is that it starts to feel like there's no other options to invest your money because Cathie must be the one to put it with because she seems like she knows what she's talking about. That's my beef, is that it's more like a marketing ploy than it's a true discovery of new information on what to be looking at as an investor who wants to have an option. It's never, my point, Emmanuel, is they didn't bring another person on to say why she's wrong. Mm-hmm. They just let her say why she's right, while continuously being wrong, by the way.
Yeah, Emmanuel, what were your thoughts on T-Doc's fall? I don't know if you have any crazy opinions on this.
Well, no, just one thing that I'll bring to light. What I understood was that their purchase of Livongo, which they did 2 years ago,
yes,
was severely overpriced.
So they purchased Livongo for $18 billion. For those who don't know, Livongo is a hardware medical company that makes devices that doctors can use virtually. So they can basically check your blood pressure using Livongo's hardware virtually, which is really cool, right? Like that's like some really, really crazy stuff. Obviously, Teladoc was like, oh, if we get that, we can really conduct everything virtually. It's $18 billion. Now that is worth 14% of what they paid. So they paid a 700% premium, and they wrote off $6.6 billion as not a loss, but just kind of like, it's called a goodwill impairment in accounting. And basically the asset that they bought is lost $6.6 billion of value, which basically made investors feel like they completely mishandled the acquisition and they can't trust management anymore.
So I'm going to disagree on that one. And I'll tell you why I disagree with it. They bought Livongo with their own overvalued shares. Okay? You have to remember, the company that they bought, they didn't just buy it and say, okay, you know what, here's all 18 billion in cash. A lot of these companies, even Zoom tried it when they were trying to do some acquisitions because they knew their stock price was way too high. Even a lot of CEOs, they can't come out onto CNBC and say, hey, don't buy our stock at 300, it's overvalued, right? Mm-hmm. So guess what they do? They're like, you know what, we needed to purchase something that we didn't have. Our stock is overvalued. So even if they overpaid for Livongo, they didn't really overpay by much because most of it was issued by shares. Yes, it was still overpaid. Don't get me wrong. It's still overpaid. But a lot of people are thinking that Teladoc's management is retarded for paying $18 billion. No, they're Livongo is actually kind of stupid because Livongo has better growth prospects and they were able to sell out. But even Livongo is like, yeah, I guess, you know what, if someone's willing to pay us $18 billion, exactly, why not take it, right? So it's I think a lot of people, they they tend to think that, all decisions where you have to take these impairment charges, you know who's stupid? The people who actually were buying Teladoc at 300, at 200 something, like Cathie Wood, right? Like, how are you valuing this business even with that acquisition? Do you really think that they're worth $38 billion? Because that's what the total merger plus Livongo plus Teladoc was at that point, and they were generating less than, I think, $1 billion in revenue a year at the time. So that's the question that you should be asking, like, hey, where is Cathie Wood's risk control in her brain to say, look, the value of what I'm buying, I'm not going to be able to justify this unless Teladoc grows at a very high rate for a lot of years. Now, the value proposition for Teladoc, in my opinion, is starting to get better. It's still not there for me to say, hey, I'm going to buy some Teladoc. I think there's still some pain that's coming on the way. But just like Sean said, this is a market where a lot of people have sold out of really good names that have really good partnerships, that have good technology. And one of the things that we're starting to see, and I work in healthcare, is telemedicine becoming a much bigger player in the U.S. economy, which that part is 100% true. What she said is 100% true. The thing is Teladoc the only company that's going to, go to the moon? I don't know.
But they have to be right on that to put a Billy in there, right? Like they cannot be wrong on that.
And that's the problem right there, that you just nailed it, which is, how do you invest that much money into it? And are there other players? The one thing I never hear from Cathie Wood, how come you didn't buy any of the other telehealth companies? How come you didn't buy Amwell? How come you didn't buy Babylon Health? They've got growth prospects too. They're in that industry that you think is going to grow. Like, I really want to know.
Let me pose the question to you and Sean. Sean, let's see if you can put some insight here. Are the researchers at ARK too young? Because that's they hire like these fresh, bright minds, they're all public on Twitter. Like, they got Tesla right, and Wright's law. Definitely the old hedge funds would never have thought of Wright's law in 2016. So that's correct. But are they too clouded by their own bias to make billion-dollar bets on these companies that, like Robinhood, that probably shouldn't be worth that?
Most of these guys that they have never gone through a real downtrend. If you're hiring too young of a people, they have no idea how to do risk management, how to actually value things correctly. They've only seen bull markets and think that things are just going to be bullish. One of the reasons why you hire old seasoned bears that have taken a lot of hits over multiple years and over a lot of market cycles is because they understand what the cost of being wrong is. A lot of these young guys that Cathie Wood has hired that will probably end up being fired because they can't manage to eke out a gain. Well, guess what? They're probably going to make the best investors 20 years from now because they're like, yeah, I dealt with this bullshit in 2020, 22. I know not to freaking go all in on a company just because, telehealth is the next big thing. So let me buy the biggest player for fucking no reason at a very elevated price. I'm being serious. Every good investor has gone through periods of downtrends. Any real investor has gone through their stories. Sean is going to tell us about his biggest losses because that's how you can get credibility, Sean. Ask me about my losers. I have plenty of losers that I know and which have saved me from making mistakes in the future.
Remember 4 weeks ago, Sachin literally coughed up his lungs talking about his worst loss. Like, it was bad.
But Chris, sorry, Sean, I'm just going to jump in 1 second.
Please.
The analysts at ARK, Chris, okay, the ones we see, they're young, fine. But those are just the analysts. I don't know. Are those guys? They have a big team. ARK. If you check their website, and they, for example, worst case, they have Cathie there to oversee them, and she's like in her 60s. So I don't think the analyst Tasha Keeney, I don't think she's the ones making the necessary day-to-day trades. So I don't know if we could blame ARK's
the analysts
failures on the young ones.
The analysts pick the stocks, right?
Yeah, well, I'm sure they do their research, and then I'm sure they have big group meetings with like the 10 other
with the Queen, Cathie, and then she's got
with Queen and 10 other older people as well. So I don't know if it's fair to like blame Tasha Keeney and Brett Winton on the
Brett Wonton.
On the
Brett Wonton, the guy who can't even do a podcast in a room when he's on Me Kevin explaining why he sold Palantir. Wonton, that dude.
Yeah.
Come on, man. Come on, man. All of their stocks are down. Roku, Coin, all this shit is down. Like, to me, and again, maybe it'll come back up. But you can't go out there and say 5-year time horizon and then sell like that's why I think it's bullshit. I'm like, what the fuck? What do you mean 5-year time horizon? You sold Palantir after less than a year. Don't give me this 5-year bullshit. Like,
let me ask Sean a question. Sean, is it possible that people, big time managers like Warren Buffett, like Cathie, referring to the question that they said why Teladoc and not other telemedicine, is it possible that they have outside influence from others, other fund managers or other multimillionaires that are saying, hey, Cathie, telemedicine's great, make sure you buy Teladoc and not the other ones?
So let's separate something for a second here that I think is really important for people to understand. Before I'm going to answer the question in line here. In 2008, there were several Cathie Woods that are gone now. In 2001, there were several Cathie Woods who are gone now. They don't survive the bear markets because they build funds for bull markets. Right? When you build funds for innovation only, what's the worst thing to get hit? It's innovation when things don't work your way. So here's the problem with the design of ARK is it is nothing more than an ETF. Okay? It is not a hedge fund. It's not a private equity fund. It's not a private capital fund. She has one option. I have to hold stocks long. And because of the size of the money she's deploying, she can only really buy certain size companies. Otherwise, she moves the market too much and has to overpay for her shares. Even with dark pool investing, and if I can explain what that is if people don't understand, when she's buying and she's buying publicly, she has to tell people what she's doing. They make money only on AUM, period. And they do charge more than a lot of other funds, but the expectation is you're going to get that growth because of the research. When the four of us, anyone who's watching, you don't buy ARK because you want to own the shares that they own. You can do that yourself. You're paying them a fee, whether you know it or not. You're paying them a fee because they're supposed to have the best-in-class due diligence and research on what they're investing in. The problem is once you get to a certain size, I don't know if anyone here has ever been in the hedge fund industry. In the world of funds, you have to know what your sweet spot is. Some funds only want $100 million max. They don't want anything more than that. Some want $1 billion, some want 10. And it has to do with the way they deploy their capital, the size of the markets they deploy into. Cathie is a massive publicly traded ETF fund that has to invest in companies that can take, Teladoc has to have $1 billion worth of shares to be bought. Otherwise, she's going to corner the market and destroy volatility and overpay for it or crash it when it sells, right? So there's considerations at play. Not that there's people pressuring her. That's not the case. They have to be able to get into companies that are both big enough to have room to grow once they put their capital in and survive downtrends. It's a much more complex thing when you're trying to build a fund based this size than it is just picking stocks and putting them in your portfolio.